Hello and welcome back to another video. Today I'm going to be explaining how trusts work in the United Kingdom. Now by the end of this video you're going to understand everything you need to know about trusts, including exactly what they are, the different types, as well as the pros and cons. So let's start with an overview. A trust is a legal arrangement that serves as a mechanism for managing and transferring assets. Initiated by a settlor, who is the individual creating the trust, assets are transferred to a trustee. The trustee, appointed by the settlor, assumes the responsibility of overseeing and managing these assets for the benefit of designated individuals or entities known as beneficiaries. The fundamental roles within a trust include the settlor, trustee, and beneficiaries. Trusts are instituted by a legal document called a trust deed, which outlines the rules, powers, and conditions governing the trust. The trust deed serves as a blueprint for the trustee's actions and the right of the beneficiaries. So what are the purposes of trusts? The primary purpose of trusts is to provide a structured and legally recognised means for managing and distributing assets. Trusts are commonly used for various reasons, including estate planning, wealth preservation, and ensuring the well-organised transfer of assets to intended beneficiaries. They offer flexibility, control, and potential tax advantages, allowing individuals to tailor the distribution of their assets according to specific wishes and circumstances. Trusts also serve as tools for asset protection, charitable giving, and maintaining privacy in financial matters. Overall, trusts play a crucial role in facilitating responsible and strategic asset management beyond simple ownership or direct inheritance. So what are the different types of trusts? There are several types of trusts, each designed to serve specific purposes. Here are the most common types. Start with your revocable living trust. The settlor retains the ability to modify or revoke the trust during their lifetime, and it provides flexibility and allows for changes in beneficiaries or terms. Then there's the irrevocable trust. The terms of the trust cannot be altered or revoked once established. It's often used for estate planning, asset protection, and minimising tax liability. Then there's a discretionary trust. The trustee has discretion over how and when to distribute assets among beneficiaries. It offers flexibility in meeting the varying needs of beneficiaries. Then there's a charitable trust. This is created for charitable purposes, with the intended benefits going to charitable organisations, and this can provide potential tax benefits for the settlor. And finally, there's testamentary trust. It's created through the settlor's will and comes into effect upon their death. It allows for the distribution of assets over time or according to specific conditions. So how are they taxed? The taxation of trust can be complex and varies based on the type of trust, the jurisdiction in which it operates, and the specific circumstances surrounding the trust. Here are some key considerations related to the taxation of trusts. Let's start with income tax. Irrevocable trusts are often treated as separate taxable entities. The trust itself is responsible for reporting and paying income tax on any income it generates. Revocable trusts are usually disregarded for income tax purposes during the settlor's lifetime. Income is typically reported on the settlor's individual tax return. For sales of trust assets, if a trust sells assets that have appreciated in value, capital gains tax may apply. The rate and treatment depends on factors like the type of asset, holding period, and the jurisdiction tax laws. In some jurisdictions, assets transferred to beneficiaries at the settlor's death may be subject to inheritance tax. However, certain types of trust may provide exemptions or reduce tax liability. Now on to the pros and cons. Let's start with the pros of trust. To start with, there's estate planning. Trusts facilitate effective estate planning, allowing for the orderly distribution of assets according to the settlor's wishes. There's also asset protection. Certain types of trusts, like irrevocable trusts, can provide asset protection by separating assets from the settlor's estate. And finally, there's privacy. Trusts offer a level of privacy as they are not subject to public probate proceedings, providing confidentiality in asset distribution. In terms of the cons, there's complexity and the cost. Establishing and managing trusts can be complex and may involve legal and administrative costs, making them less suitable for small estates. It could also be a loss of full control. In some trusts, the settlor may lose direct control over the assets, especially in irrevocable trusts where changes are limited. And finally, tax reporting. Trusts may have annual tax reporting requirements, adding administrative burdens and potential costs. So this has been my video talking about how trusts work in the United Kingdom. Hopefully now that you've watched this video, you understand everything you need to know about trusts, and this should assist you if you're looking at setting up your own one. If you found this video helpful, please comment down below to say it helped you out, and like and subscribe for more content like this. Thanks for watching.